bull flag, bull flag, bull flag, bull flat, bull, or how to pronounce this?
Flag, flag, flag.
What's up guys, I hope everything is alright and all of you having a great time. Today we'll learn one of my favorite trading patterns. Yes, you'll learn how to trade bull flag patterns. Now I want to talk to you about you before I start. Which patterns do you use? Which ones have you had success or failure? Please let me know in the comment section below, because if you are missing something and wanna learn more, I wanna make a video about it. Now let's get started. Bull flag pattern is one of the most used patterns or formation types in the trading world. From 1-minute scalpers to 1-year position traders. It's my favorite trading pattern and at least in the top 3. It's extremely simple to identify and use with a couple of techniques. So, as the name suggests, the bull flag pattern has a regular flag shape from the real world, a pole and a flag. So basically, share price makes a huge move and forming the pole. Then the stock consolidates for a period of time and shaping our flag. Final stock breaks out of the consolidation with a strong volume. The bull flag pattern is a continuation pattern. It's generally found in an existing uptrend or the start of a new uptrend with a catalyst. As I teach to all beginners, never focus on the shapes, perfect patterns or formations. Always keep your eye on the meaning that they deliver. This is how you read the markets. Now let's talk about what is the meaning of the bull flag pattern and what kind of message traders should get from this formation. So, let's start over. We have a regular stock at our hands. What we look for is an existing uptrend or a catalyst. A catalyst is simply a huge driving force for the stocks. For example, news. Think about it. I have a company and my company discovers a limitless energy source. What would happen to my company's stock prices? They would skyrocket. So catalysts are news, earning reports, product releases, and so on. I'll talk about the most important catalyst to watch in other slides. Now, a catalyst created a huge interest in our stock. Many traders in the world show their interest by buying shares. Or if an existing uptrend has a really strong momentum, sellers cannot stop it. As a result, price keeps rising dramatically. This is how our pole shape forms. However, you should always confirm this bullish action with the rising volume, which I'll show you in the next slide. After the strong bullish action, finally we either reach a strong resistance point in the price or buyers decided to take profits from their positions. This is how our flag shape was formed. Now, this is where we enter a trade with the expectation of another bullish rally with the breakout. The move is expected to be in the length of the pole. Don't worry, I'll show you 3 different entry styles and placing stop loss orders soon. Now, I would like to teach you how to watch volume while trading the bull flags. Volume is a secret key of almost all patterns and formations, because volume gives us an indication if the movement is fake or real, or simply to understand if this movement is supported and backed up by other traders. What we really want is a rising volume after a catalyst, which will indicate buyers have a real interest in this stock. This is a good pole for our stock. After that, we wait for a consolidation period, a pullback phase. What we look for here is a stable volume. If it's decreasing, it's even better. However, we definitely do not want a rising volume during this consolidation. Now our pole and flag was formed. What we need is to determine our entry point and where to place our stop loss orders. Let's talk about it in the next slide. Now, opening a position to flag patterns totally depends on the traders and their risk appetite. However, the most common entry in the world is the breakout over the flag, which is expected to start a new bullish rally. This is also my personal entry style, but as I said, trading and strategies are not constant or fixed. Every trader has their own special method and approach from their own experiences. And these are my experiences. Another way to say this is how I become really successful at trading. Because I tried hundreds of methods and found out what works for me. The second common entry is waiting for a resistance breakout, which is the highest price point of our pole. This type of entry has a minimum reward because we are missing the most of the movement already. The final entry type is not common. However, this is a style as well. The problem with this entry model, there is no clear entry. You're just trusting the bull flag pattern will work soon, but nothing else, or maybe you have a piece of insider information. The second problem here is that your entry point is so close to your stop loss order. It can be easily stopped. Placing stop loss order is quite easy, just below the flag. If you can't find a strong support point, just place it a little under that. Let's summarize what we have learned so far. 1. Look for an existing uptrend or a catalyst. This is where the bull flag pattern comes into existence. 2. Wait for the pole shape to be formed. What you should focus on is high and rising volume. 3. Watch for a small consolidation or a pullback with a light volume. 4. Check out if a bull flag pattern shape appears or not. 5. Enter a position depending on your entry style. I always look for a breakout from the flag. 6. Place your stop loss order immediately. This is so important. Actually, it's the most important thing unless you are a scalper. 7. Write the breakout and take your profit. Due to your risk-reward ratio, it just depends on you. This is how simple it is to trade bull flag patterns. Before I move on to live examples, I would like to talk about catalyst types. So, I would like to teach you the most important type of catalysts. I'll go over each of them briefly. However, I don't go into detail because I'll create a one whole video dedicated to catalysts soon on my YouTube channel. Please subscribe if you are interested. It's really simple and every single trader should know about this. As I said before, a catalyst is simply a huge driving force for the stocks, which could be positive or negative. News. Every catalyst is generally news. News about the world, company, people, employees, customers that may affect the share prices. Earning reports. As you guess, financial report releases by companies about their growth and revenue. These are very dangerous catalysts. Beginner traders should stay away from trading them because a good report does not mean a bullish rally. Anything may happen. Product launches. These are announcements or public events like Apple events each year. I like them and trade with them a lot. Mergers or acquisitions. One company joins another company or acquires another company. These are really big events and creates very big moves in the stock prices. Stock buybacks. A company buys back some of its shares available. This generally increases the value of the remaining shares due to the reduced supply in the market. Deals and contracts. These are my favorites. A company signs a deal about anything. This generally indicates a company is growing and improving, a very bullish indication for the stock value. Lawsuits and frauds. This is also what I watch every day because it can drop the share prices by 50% in a single day. Not useful for bull flags, however, really great for the bear flags, which I will teach you in the next videos. This was a brief introduction to catalysts. I'll create one whole video dedicated to catalysts soon on my YouTube channel. Please subscribe if you are interested. Here is a clear example of a bull flag. Probably a catalyst pushed the price really high. You can see the green candles in a row, one after another. This should be a piece of big news on the stock. And our pole shape is formed. Then buyers are exhausted at the moment and the consolidation period starts. However, sellers didn't take the control yet. Now, as you can see, our flag shape is formed. Now we are ready to enter the stock, looking for a breakout from the flag. And we open our position with the flag breakout and placing our stop loss order at the bottom of the flag. The general take profit point is 1 to 2 risk reward ratio. However, taking profits depends on you and how big the momentum is. Sometimes you don't want to take profits early. So the expected move is around the length of the pole. However, this is not a rule, and in reality, it does not happen all the time. Never trust it. Take profits when you see fit due to your own risk management. Some of the flags are really small, sometimes even 1 or 2 candles, while the pole could have 10 to 15 candles sometimes. However, one specific rule is pole cannot be smaller or shorter than the flag. That is not a bull flag pattern. Now, flags don't have to have a perfect shape. Some flags look like rectangles, some others pennants, some of them wide, some of them narrow. Shapes are illusions. Meaning is the only reality. And the reality is trends, catalysts, high volume, light volume, and so on. Now I'll teach you catalyst-like important technical indications which help you to identify bull flags before they even happen. You cannot easily find this information anywhere. I try to give all my knowledge and trading secrets to you so you can make few mistakes and much more profits in your trading career. I'm about to show you what I use during my day and swing trading sessions with bull flag patterns. However, this will be a brief introduction to these special indications. I'm planning to make a whole new video which is in much more deep detail about it. Now let's see. 52-week high, extremely important resistance once it's broken. The price generally flies and creates bull flags in a row. All-time high, even more important than the 52-week high, because once all-time high, ATH, is broken, the sky's the limit. There is no resistance at all. Golden cross, 50 SMA crosses 200 SMA above. Very special indication, watched by millions of traders out there. Gives us many trading opportunities of trading bull flag patterns. EMA 9 and 20. Now this one is special. It's used by day and swing traders a lot during consolidation or pullback. When the price touches 9 or 20 EMA, it's considered as consolidation is over. These last three are for day traders. As also a day trader, I use these high points as a beginning of breakouts, because once these price levels are broken, price flies and creates minimal flag trading opportunities. Don't worry, I'll make a new video in much more detail about all of these with live examples and practices very soon. Now, let's go back to TradingView. Bitcoin has this amazing bull flag example for traders. First of all, let me draw our bull flag. As you can see here, our pole is formed, a nice and a strong bullish momentum. And we check if our volume supports. Yes, volume is rising. Now price enters a consolidation period, and our flag comes into existence, as you can see. If we check the volume, it's decreasing and light, just as we wanted. Volume spikes like this one do not mean so much anything unless there is the following momentum. These generally happen when underlying security reacts to a momentary event or a specific moves of market makers. I remember once the Bitcoin price jumped 20% up in 1 minute and back down. The big fishes, aka market makers, wanted to trigger stop losses in the market. As I said, a single volume spikes is not that important. What you have to look for is trending volume, one bar after another. Now, the expected move of the price is around the length of the pole. Let's copy this one. And our entry is the breakout from the flag, and the stop loss is just below the flag. Great, let's watch the trade. Okay folks, I think we had a really deep education about how to trade bull flag patterns. We covered things from catalyst to volume, trends to special indications. If you missed anything, did not understand well something, please let me know in the comment section below. If you can subscribe to the channel and leave a like, it will be great for me, so I can create much more content with trading secrets, strategies, methods that you have never seen before. Please take care and see you around.